get started. And
There you
as I
go,
mentioned
Deborah.
tonight's going to be a little bit more basic, a little bit back on setting goals, because what we really want to do is we want for everybody to be able to have a little bit more of a conversation. So you see my screen okay? Awesome. Okay, so in invest in yourself, what are your goals for investing? So we talked about the word at the beginning, but this is really about investing goals. So a little reminder, Massive Capital, vertically integrated real estate company. We specialize in ground up construction with retail, flex space, industrial, mixed use. We're an owner operator for value add multifamily assets. Over here on the left, we raise equity. We have a brokerage for triple net retail. We have property management for triple net retail. We do development, construction, metal, and wood, and then education. So we did a lot of December focusing on our education. You can see we're very Texas centric. We do have assets in Denver, North Carolina, and just south of Atlanta, Georgia. The Phoenix and Tampa are markets that we're interested in for new retail development. And we're partnering with Realty One that has 390 million in assets, and Massive Capital has 175 million in assets. So we're definitely growing. We're very excited about that. Went too fast. So Brenda is now in the witness protection program because I didn't have time to upload a photo. And so is Linda. So we'll release them from the witness protection program soon, but you can see our team is definitely expanding. The folks at the top are ones who you deal with at Massive Capital most of the time. But we've really built out our database, our talent base, and a lot of that has to do with merging with Realty One. And then the principals, of course, Sharar and Sanjay's with us tonight. We got to rearrange these so Mike's not way over there for Massive Capital. The guys that think linearly, it throws us off. And then there's Bo, Alexis, and Pat. They're from the Realty One. So when we merge together, we'll have 6 partners that will be operating Massive Capital for us. So we may get a code before the end of the night for you guys to upgrade to VIP for free. If not, we will include it in the replay of this webinar. And if someone could post the link, if not, I'll get the link in a minute for you to be able to sign up. But for those of you that know, we were going to be doing an in-person, and we had some struggles with getting that in-person organized. So it's going to happen later this year. So we're doing a virtual. Anyone who's registered in the in-person should have got an email telling them you can get a refund, you can get a credit, you can do anything. We'll definitely make sure we take care of you. A general admission for this is no charge. It's a 1 full day virtual conference. And for those that attended before, they really enjoyed it. And then there is a VIP ticket, and we'll make sure I was supposed to get it before we started tonight. And hopefully we will, but we'll post that in the chat, or we'll make sure that it gets in the email. But it's on February the 16th. It's a Friday, and it's an all-day event, and we hope everybody can join. So this is a snapshot. So we're going to start at the bottom. So we closed on a land development deal in Georgetown. We closed on Amberwood Apartments in Dallas, Warner Robins in Georgia. We did raising for a new development, X Space. We're actually going to be starting construction later this month. Very excited about that. We closed on an asset in Denver, Colorado. These are 2 triple net retail leases where we've got the property. So this one is a retail center, and this one we have 11 acres that we're going to be doing development. And we also closed on a asset. Oh, sorry, North Carolina. I messed up the numbers here. And then we also have a 10-acre industrial development in Houston, Texas. And our Austin Harris Ridge is now 100% funded. We've made some movements on that, and we're going to start construction later this month. And then we have our 506C offering, Horizon. We'll have a little bit more information about that. And if Maria or Brenda can also post the link to be able to sign up to that in the chat, I would appreciate it. This is a beautiful shot of the roofs. We got to get better pictures some days, but and there's also a QR code, but we'll talk a little bit about that deal later on. And so going to get right to it. What are your goals for investing in 2024? So we want to talk a little bit about This is very frequently used when you're setting your goals, right? Your SMART goals. So the most important thing is they need to be specific. So you make your goals clear and specific. It is not enough for you to say, I'm going to start in real estate investing this year. That's not clear and specific. I remember when I made the decision to do it and set my goals, I had set a goal that I'm going to get invested in 2 syndications before the end of the year. So again, it was defined, it was measurable, it had targets for it. And for those of you that don't know my story, those 2 first investments 5 years ago were actually with Sanjay. So that was how I started on my career. And so I set real measurable goals that I was going to invest this by that. So make sure that your goals are clear and specific. Okay, I'm going to lose weight. Again, we're not talking too much on personal. I want to lose 10 pounds by. Okay, so measurable, define your measurable. So I want to do what by when, and it could be a dollar value. I have $250,000 and I'm going to invest that in various projects and I'm going to have my investments. Again, you're clearly not going to make an investment in a bad deal just to fit your timeline. So not what we're saying. What we're saying is try to set something, confirm that your goals are attainable. So for me to say, well, I was going to invest $1 million by the end of the year, but I only had $100,000 is clearly not an attainable goal, right? So you have to think through what is reasonable, what is attainable, and then you want to make sure that your goals are relevant. So you want to verify your goals are relevant. Is this something that's practical and that can happen? And then you want to set a timeline based on a plan. So I talked a little bit about that earlier. I wanted to get, so for me, I made a decision I was going to get in real estate investing late August. I went to a whole bunch of weekend webinars, started to educate myself, and I'd even started educating earlier. And then I said, by the end of the year, I want to invest in 2 syndications. And luckily, through the group that I was getting my education, and Sanjay was one of my mentors, I was able to make those 2 investments by the end of the year. So I achieved my goal. So then what do you do? What is your plan? Okay, you need to start saving to invest. Okay, clearly, if you want to become an investor, you have to have something to invest, right? Most deals do have a minimum of $50,000. Sometimes you can get in for less, so always make sure that you ask. And you want to consider your goals, okay? What are you looking for? Are you looking for wealth creation or wealth preservation? These are very different goals, right? Wealth creation means I'm willing to take a little bit more risk because I'm young, I've got disposable income, I've got things I want to do, and so I want to create wealth. And so something that might be measurable, I have $250,000 and I want to double that to $500,000 in 5 years. Okay, that is achievable, assuming with most goals, most things that happen. Preservation is I'm going to be a little more conservative. And we've talked about this in some other webinars. So for example, for those of you that don't know, I've invested 31 times, 20 as a passive investor, and I have a lot of diversification. So a couple of my ones are just a straight pref payment. You know, it's not a home run. It's where I get 10% pref equity. Every quarter, I get some money in it. I call that a hitting a single. Okay, and then there's a couple of deals that might be a double, and then you might be doing a value add apartment, and that's where the bigger wealth generation is created. And so I'm trying to hit a home run and do different things. You have to consider the level of risk and reward. For those of you that have been on our webinars before, you know that that Sherrard talks a lot about measuring your risk and your reward, right? It's super important. We'll maybe talk about that a little bit more with Sanjay once we get through this. And then the time scale. Many investments are held for 5 years. Does that work for you, or do you need a shorter time scale? So for example, Brenda and I were having a call with a potential investor, and she needed to get some money a little bit sooner because she was trying to send her son to college. And she wanted to make sure that her investment wasn't tied up. So I need this money for my son to go to college. And so she was looking at investing in a deal that had a 3-year timetable versus a 5. So again, you want to make sure that you have your goals. Now, again, sometimes your goals may be unrealistic. So if your goal is I want to double my money in 18 months, chances are that's fairly unrealistic. So you go back to the other ones and does it make sense? Is it measured? Is it correct? And then do you need cash flow or wealth creation? So again, when I first started investing, when I made my first investments, I had a really good job. And I was not worried about cash flow. I didn't need cash flow. In fact, cash flow was almost like a nuisance because, I got these checks now. I had to do some accounting. I had to follow different things. And especially when you've got a lot of investments happening, I was very worried about or more focused on wealth creation. Now I'm close to 65. So I'm changing a little bit, right? I'm a little bit more on the preservation. And I'm going to need some of the cash flow because I don't want to start collecting my Social Security yet or whatever it is. So you have to make sure you do it. And I talked about this a little bit earlier on. Mix up your investments, diversify, and create a mix. I should have said mix, not a miss, sorry, of risk and reward and timelines. So again, what you want to try to do is when you balance out what you're going to do, when you're sitting there making your plan, you want to think, okay, so I have this money coming due roughly in this time period. And you need to start preparing so that when a deal is close to going full cycle or a deal's happening, you have some sort of idea of timing. Now, you can't always predict the timing, right? Because you're not in control. The sponsor's in control, and they're the ones that are predicting the timing. But you generally have an idea. If you're invested in a deal, they'll normally tell you, okay, we're going to market. Okay, we're under contract. If everything happens within the pre-described timelines, we should be able to give your investment back around this period. And again, you don't necessarily want to leave that money stuffed in your mattress or a bank account or doing anything. You want to have a plan. So, okay, I know I'm going to need to start looking for somewhere to redeploy those funds. And I want to talk a little bit here about the importance of redeploying and compounding your money. All right, so I've used this example before, but if you can imagine, you have a goal of doubling your money every 5 years. So you invest $100,000. 5 years later, it turns into $200,000. If you have a plan that you're on the wealth creation and preservation, you're going to take that whole 200,000, reinvest it, it becomes 4. Reinvested, it becomes 8. Reinvested, it becomes 1.6. Reinvested, it becomes 3.2 million. So think about that when you're making your plan. Now, again, that's assuming there's no tax implications. All of your deals double your money in 5 years. A lot of assumptions in my math. But what I really want you to understand when you're making your plan, you need to think this through. So if you're in a cash flow, and if I took that 100,000 and said, okay, I'm going to double it, but I need the 100,000 to live on the next 5 years, you're not going to be creating the same wealth that you're going to be creating. Yes, you're going to be able to maintain your lifestyle. Yes, you're going to be able to do some of the things you want to do, but you really, when you're creating your plan, you need to think way out, right? You need to think, and this power of compounding your money is something that cannot be overlooked because it is the true benefit of real estate investing, the compounding of your earnings. So again, where do I start? How do I get started? So again, I'm going to go back to myself. How did I get started? I attended webinars just like this, and people told me what they're doing, what they're thinking, what's happening. So you got to start educating yourself. There's plenty of places to educate yourself. We are by far not the only place to get educated. There are tons of webinars. There are tons of groups that are doing things. There are tons of programs that have education programs. As mentioned, we have one at Massive Capital, but there's several groups that have education programs. But you want to get started in educating to invest. But one caveat. If you don't have your plan and you don't know where you're going, you don't know what type of education you need to get. So if your goal is to become a sponsor, you need a different type of education than if you're just going to be a passive investor. If your deal is to different things, if you want to do different things, you need to make sure that you understand where you're going so that you get your education in that. Then the next thing you're going to want to do is build your network to find some good deal sponsors, but it's even more than that. You're going to be finding people that you can connect with, people that you can get ideas with. If you joined earlier, we talked about 3 years ago, my goal was omnipresent. I wanted to be everywhere, go everywhere, connect with everything, learn everything, get to meet everybody. I went to probably 5 deal presentations a week, 5 webinars a week, and at least some sort of conference but I was obsessed with getting educated and finding places where I could do it. Then you're going to want to start, I mentioned this already, attending the deal offerings. Let's say we have a deal offering tomorrow night, it's a 506C, you're not an accredited investor. Doesn't mean you can't come and learn. Doesn't mean you can't come and ask questions, okay? Because it will prepare you for when you want to do, and you want to go to a variety of deal offerings so that when you ask questions, you want to see how do they answer the questions. Do they know the answers? Do they have the right answers? Do they make me feel stupid? Do they make me feel welcome? Do I feel like I can know, like, and trust them? And then you're going to start to narrow down your investment box with who you would like to invest in and what type of opportunity. We didn't talk a lot yet about the type of opportunity, but there are obviously several types of opportunities. You even look at our list here. We've done some land entitlement. We've done some land development. So the difference is entitling is getting it ready to develop. Then we've got some land that's entitled and we're developing it. Then there's the next phase of actually developing it and going vertical. So they're all different types of deal. And then there's buying value add multifamily and doing the plan. So there is a whole type of range of things that you can invest in and get your idea of what types of opportunities do you want to work with. It's very, very important, but the who you're going to invest with, I'm going to be honest with you, is more important than the what, okay? Because you want to make sure that you're invested with people that are thinking like you, people that you feel part of their community, people that you feel you can ask questions and learn. I started a little Facebook group called Earn and Learn. And my thing was I wanted to earn and I wanted to learn and I wanted to create a place. So again, you want to look for places where that is something that is possible. So a lot of people don't know this. Hopefully many of you on the call do. But if you have retirement funds in an old account, so your current employer very rarely is ever going to let you do this. But if you've gone through several jobs and you have some retirement funds not with your current employer, you can convert these to a self-directed, some sort of self-directed program. There's 401ks, there's IRAs, there's a variety of programs that can happen. But what a lot of people don't understand is they don't understand that they can pull these money out of that control, and then they can in turn make the decisions of where they're going to invest. Now, I spent a lot of energy looking at this because I'd never heard of it. And when I learned what fees were being charged on not self-directed IRA, but through my retirement funds, and when you actually track the growth of your retirement plan, it was very volatile. And since then, I'm no longer employed with anyone. All of my money is employed, and I do a mix of different types of investment, some with cash, some with my retirement funds. I tend to be a little more conservative on my retirement funds because that's in the preservation, right? I already want to make sure that I'm not risking any of that. That is my retirement. That is the plan. That's what I will live in once I stop doing active different things. So I want to make sure we do it. I always talk too fast on these. Oh, there we go. And so there's me pointing at you. I thought that was a funny slide. So if you want to start your investing journey, whoa, I went too fast there. Touched the button. I got all excited, pointing at myself. Hold on. So if you want to start your passive investing journey tomorrow, we're going to put a link in the chat. We do have an opportunity for our Horizon Apartments. It is a 506C for accredited investors. And again, like I said, it does not mean that you can't show up and listen. Again, you want to go to as many deal sponsors, massive capital, other deal sponsors. So you want to learn as much as you can because you worked super hard to get that tax-free money ready to go. So I'm going to stop sharing And Sanjay, any big things you think I missed on this that you'd like to talk about?
No, thank you, Trevor. Um, just what you said at the beginning, we're sharing, this is beginning of the year, so we're sharing our thoughts, what we do, how we think. This is not a financial advice or a legal advice. As we talk about a lot of the risk and, being conservative and all that, it can look like a financial advice, but, we're not financial advisors by any means. So keep that in mind. With that said, what Trevor said, always early on, what I learned in my life, like, it's very easy to say for anybody to wake up one morning and then say, hey, I want to make $1 million this year. Yeah, that's a great target goal, but how do you do that, right? So what worked for me and what I did back in 2013, 2014, when I was looking at, while I was still working for a corporate job, is, what am I going to do action wise, right? Action is where I set my targets. And my target, similar to Trevor, I'm not as a social butterfly as Trevor is, but my target was every week I will go to 2 networking events and one every weekend. I did that every week, day in, day out, 2013, 2014, countless events around DFW, right? There is no lack of event. And, I wasn't that focused on real estate at the time. It's through that networking and talking to people, and I cannot tell you all the things that I explored. I used to go to all kinds of events. And when I had that target, I'm gonna go 2 events in a week. Well, I couldn't find a franchisee type of event, business, real estate related event. Believe it or not, I went to an event. It was like a weirdest thing, some sort of a food gathering, and people were doing thing. And it to this day I don't understand what exactly the event was, but I met people, right? And I'm a big believer of you need that one person, one connection, right? And it's one connection at a time. So folk, I always, whenever I go to networking, I go deep, not wide. And nothing is right or wrong. It's whatever works for you, right? What works for me is deep, not wide. So when I go to networking event, I spend a lot of time with one person, 2 people, 1 or 2 people that I connect with. I have something common or something I want to learn or something I can contribute to them, something I know that I can, something that excites me, right? And I feel something there. I spend a lot of time on that event. So believe it or not, 2022, Schreier and Mike dragged me to that Jake and Gino event, MM5. And I'm going there, and those events are there. Jake and Gino, great event, right? Nothing about the event, and I'm bored, and I'm like, it's the same thing. What do you do? Are you LPGP, all that stuff? You're doing the thing, and I'm bored, right? So I'm in the corner, hiding somewhere, and then I'm eating something, and then this one guy kind of approached me, started talking, and we connected really well. I spent most of my time with him after those 2 days, right? Guess what? He was with me at the Kilimanjaro trip in my tent a year later. And we connected and just a different type of connection. Real estate side, we haven't quite worked much anything together. We've been trying and different things, different markets, different areas, but there's a connection. And believe it or not, I learned a lot of good things during our camping from him. I mean, he's got a very different way of thinking, very different way he grew up. But anyway, just my style, right? So figure out your style and have a specific, right? I'm gonna go to 2 events a week was my thing every week, and that's what I did. And I feel like that's what I did, and that's a great thing worked out for me. And it's a just think about that. So similar thing on massive, right? Like we go wide on massive, right? We are vertically integrated, but we do focus very focus on things. So that's very important for my perspective.
Yeah,
I'll stop there. Yeah,
I think
question.
it's important to figure out what works best for you. But then when you're setting goals or you're challenging yourself, I talked a bit before about last year, my goal, my word for the year was change. I'm not that good with change. The way I describe it when we have our meetings is I'll move direction, but I'm a big ship in the ocean. I'm not a speedboat. And so, but once I get my direction moved, I'm going, right? But it takes me a little while to shift. And when you're setting your plan and when you're thinking it through, you want to push yourself past your comfort zone, but you don't want to push yourself too far into the risk category. You don't want to just say, okay, I'm going to make a deal. The first email that pops in my inbox tomorrow, I'm going to invest my money with them. I don't know who they are. I don't understand the deal. You worked way too hard to get your money to invest to do that. You want to make sure that you've spent the time to get educated, to get to know people, to be able to ask questions, get them answered. So if anyone has any, you can ask a question or you can share your experiences and your life lessons, because that's what really this call is about, right? Helping each other set realistic financial goals for ourselves. So for me, just to let you know, my goal this year is to many of my investments are coming due. And so my goal is to put my money where my mouth is and invest more massive capital deals, and be able to go along the journey with my partners. I was able, out of all the 8 ones we did, I was only cash flow liquid enough to invest in three of them. And I would have loved to have done more, but it's kind of a goal of myself. But will I put all my eggs in one basket? Probably never will, right? Because again, diversification, having some spread, having some different asset classes are very important, because I have medical center investment, I have a storage new build, several ones, because I want that variety for the safety net.
Yeah, and if anybody have question, please raise your hand or feel free to chime in the chat. You know, being an analytical guy that I am, I had a hard time understanding this diversification, right? Like, why is that diversification important? If you diversify between high risk, low risk assets, by going into the lower risk assets, you're giving up your return, right? Potentially high risk, high return, low risk, low return, right? So, and for the most part, it applies. So one way I would that helped me understand why diversification is important is, if and I use the casino as an example a lot of the times just because it's a there is some analytics behind this, a lot of analytics. So if you go to a casino and you have $100, right? You're playing with that money, and let's say you want to double that to 200. By the way, I count cards, and if I go, I play blackjack with very set rules. And historically, I've done well on blackjack. So, but I don't go regularly. It's just don't enjoy making money that way, right? So if you have $100 and you're playing blackjack and you say, well, I'm going to take risks, high risk, right? You're doubling, you're splitting every eights and aces, and you're supposed to, right? Guess what happens? House never runs out of the money, but once you run out of your $100, you're out, right? You are out. You have no chance of making your original $100 back. You're dead, right? In that scenario. But if you were to diversify and play, conservatively, then, well, guess what? If you have the money, you can come back. I always start with on a $5 table with $100 max, right? So I can do max 20 bets. I have gone down to $10, even $5, and then come back up and made all the way to $200, $300 back, right, in a night. So, and that's the key, right? Until you have that last $5, $10 to play another bet, you have a chance to live and see another day, right? And that's the diversification does is when the high risk goes down, you're not out of money, you're not dead, you still have money for food to eat, right? And then go bring it back up, because that's what happens. And that's where that diversification is very important, right? You're taking risks, and now, like Trevor mentioned, the medical office, we have retail, we have apartment complexes, of course, single families, a whole separate asset class. And then you have new build, which I say new build multifamily, new build retail are a completely different type of risks, right? So, so when the medical office building may go down, your apartments may do well. When apartments may not do so well, your triple net retail may do well, right? So you've got the cash flow from a different asset class if you're diversified. And that's the whole thing is if you're all in into multifamily, then well, last year multifamily struggled, and if all your deals, God forbid, doesn't have, I hope doesn't happen to anybody, but all your deals go bankrupt, you lose all your capital. Well, you're back to square one. You got to save and get back up and do it. But if you have some in multifamily and some in retail, some in medical office, some in storage, or whatever you're comfortable, never invest in something you don't understand, period, right? Make sure you understand what you invest in. So, and that's the learning, right? But if you're diversified, multifamily is down, retail is there. So that's where that diversification pays off over and over and over again, always. And kind of like the massive capital side I was talking about. Yeah, we do go wide from a massive capital perspective, but we are really diversifying, right? Like, yeah, markets will go up and down, but we'll diversify and we'll survive. No matter what happens in the market, no matter how the economy goes, one of our segments are going to do well and some are going to pay back at different timing. And that's what the timing helps with. So I'll take a pause here. Questions or
Yeah,
comments from anybody?
feel free to raise your hands. I think you should be able to unmute yourselves. We want to make this as interactive as possible, helpful as possible.
Yeah, I love seeing a lot of these names. Familiar names here, but I know I haven't been here for a few weeks, so there are a lot of new names. You guys have done a great job of pushing out the information.
I'll jump in, guys.
Hey there. Hey, George.
Hey, what's up, Trevor? How are you, man?
Awesome.
Yeah, I just wanted to give my feedback. Before last maybe a year or two, I was not so adamant about diversifying, right? Even though like I'm in niche short-term rentals, right? But diversification, especially when you are down, minimizing your risk and asset that's low risk, right? And because you might be able to do something and you're great at it, right? By diversification, partnering, aka with people like you guys, right, that know what they're doing. That's what I would call diversification, right? So I big adamant of that. I read a book. I just almost finished with it. I want to recommend it to everyone. It's called Money Master the Game, and not that I'm pushing for stocks or anything like that. It just opens up. It opened up the perspective about how how to diversify and why you need to diversify. And phenomenal book. I mean, it's like 16-hour book, but if you guys want to have an idea of what diversification means, that book opened up my mind completely. So just wanted to give you Sanjay, big props on that, and Trevor for bringing that up. Firm believer that you've got to minimize your risk, right, and put it in different asset classes. So amen.
And it is a little easier if you've got a lot of investments to have some diversification, right? I mean, again, I've been in 31. I'm actively still in 60 or 18. So it's easy, right? It's still more than 50% multifamily because I'm a big multifamily component. I do have new build multifamily, development multifamily, and then value add.
Yeah, it's called Money Master the Game. Phenomenal book, right? Just from a high level, great book. I
Yeah,
totally
so
agree with that, Trevor.
Angel asked a great question about how do you gain the knowledge? So you gain the knowledge often by finding partners. So we were not in the retail development space, and we've been partnering with Realty One because they have the experience in that space. Also on our one deal here in Georgetown, we partnered with some people that had some development background, some development things that happened. You know, many people in our group have done a lot of land deals or land entitlement, but it's really important to be able to find someone who is an expert in that space and then work with them. We also, all of our assets where we're not in a market, we have local boots on the ground. So in Denver, we have a asset managers boots on the ground in North Carolina and Georgia. So again, partnerships is a really good way to be able to grow and learn. Now, myself personally, as a passive investor, I started connecting with the people, then started watching where the investments were going. And I already had so let me give you an example. I wanted to invest in storage, but I didn't want to buy the old storage and automate it. I wanted to do a new build. I wanted to do an investment in North Carolina. And I had a friend who I've been following for more than a year. And I kept following, so I kept following new build storage. I kept following deals in North Carolina, and I kept following my friend. And then boom, she sends me an email with local sponsors that I already met and knew because I went to different webinars and I met them at Dan Henford's conference in Charlotte. So all of a sudden now, all of my hard work and all of my planning and all my perspectives, things that happened. So a deal with people I knew, liked, and trust in an asset class I was looking at, in a market I was looking at. Now the jury's still out. We've just finally built it. They're leasing up now. Was I a genius or not? I hope I was, and it was a good investment. But that's how you kind of set the stage to learn to be able to go. You know, so again, I didn't go to any webinars when they're buying grandma and grandpa's storage unit and automating them and I only went to new build webinars so I could learn what were they presenting, what were they talking about. And again, a market, I started looking for people that were in that market that were presenting deals. I passed on 3 multifamily deals with this same group because I really wanted to do a storage and I wasn't as excited about their deals. So that's how I want to make sure that people understand this planning thing. There can be a method to your madness. Now, it did take me 13 months. I was 14 months. I was well short of my timeline that I wanted to get one, but that's not as important as achieving the goal with your plan.
Yeah, and good comment earlier on, minimizing the risk. Um, and you definitely want to minimize the risk in the big scheme of things. But the way everything works, you have high risk, high reward, low risk, low reward, right? Risk and reward are directly proportional. So, I don't always necessarily minimize the risk. I try to price the risk, right? If I think of something as high risk, I want higher reward, higher return. So, do I want everything high risk? Absolutely no, right? Like I want something lower risk, so there is a constant cash flow or a constant growth. The security is there, and then on the other hand, you definitely want to have those outliers that can take off and make up for everything else. So
Yeah.
definitely, you want to plan and play the risk as opposed to just avoid the risk. So in
And
my
then
opinion.
again, setting those metrics, right? Like I mentioned, I liked this person. I spent a long time getting to know her. I like that market and I wanted to do, you know, so I spent a lot of time. And again, I've only done one investment in that space, spent a lot of time and energy. The jury's still out, it's leasing up. I hope it's a home run. So far, everything is looking good. It's in a great market. And I hope to go visit it actually later this year. Awesome. Great point, Jen. Anybody else?
Trevor, are we sharing goals? Is that
You can share anything you want.
okay?
Liz.
I just wanted to share mine because I guess it falls in line with this idea of diversification because I've been passively investing and co-GP now because of my involvement with Massive. So yay to Massive. The way I want to diversify this year is to be a lead GP. And so that when you guys started talking about getting out of your comfort zone, my comfort zone is I'm not an extrovert, I'm an introvert. And so it's going to be challenging to, you know, lead webinars and go present. And but that is the next move for 2024 for me is to get out of my own way, be a lead GP. And you know, that's my goal. So just wanted to share.
That's awesome. Yeah. You know, and it's really important to understand all parameters, right? And again, balancing yourself out. So when you say you want to be a lead GP, you can be the lead GP, but you don't have to necessarily be the charisma of the deal. You don't necessarily have to be, you know, the presenter of the deal. You know,
Right.
for those that don't know, I don't underwrite. I can read it, I understand it, I do it, and I admit it. And if somebody on one of our deal webinars wants to talk about underwriting, they're going to talk to Sanjay, or they're going to talk to Shirar, or they're going to talk to somebody else. You know, there are a lot of, and you want to make sure you have all of the best people on the bus. That's the more important factor, right? If you're going to do a deal, you want to have the right people in the right seats doing the right things. Because at the end of the day, to be honest, the switching from a lead investor, the real responsibility is now you are responsible for somebody else's life savings. Think about that.
Right.
Man alive. You know, I can't imagine waking up in the morning and I lost a bunch of people's money. Wow.
Right.
I haven't had to experience it yet. I've got one deal that's close that I raised a little bit of money on. It looks like we're gonna not have a total, but it's a big thing. You know,
Yeah. And I
I
know,
worked hard for my investable money. I've spent a lot of years.
right. And I know with you're such a good communicator though, whether the deal is performing or not, I think the most important thing and the thing I love about you is your transparency, your honesty, and your willingness to share what's going on no matter what. And so
Thank you for that. And one other thing too, you know, I'm an introvert. Most people don't know that. I'm an introvert. And when I go to, I'm going to be honest. So when I go to a conference, I leave totally exhausted. And I actually have to retreat. I go up to my room and I psych myself up and I say, I'm going to go meet 5 new people now. And I can't stop until I've met those 5 new people, which again, I'm going a little wider than deeper. And then I'll see Liz. I just met her and we had a good conversation, and I'll see she'll talk to somebody and then I'll just walk up because Liz has a stranger next to her and it's a little more comfortable for me to walk up and it, you would never know that because I go to a lot of events. But deep down inside, it's super scary. Or I'll go to an event with Brenda. We went to an event, and the first event we went to, I told her, you know, I love it because now I can introduce her to everybody because I know everybody. But by introducing her to everybody, it opens up that whole gamut again, right? And that's another really good trick for people that are introverted. Bring somebody who's not introverted but doesn't know anybody and introduce them. Anyone else want to share their goal for this coming year? Feel free. Yeah, find my wingman, voice man. Trying to read all the comments, make sure I didn't. Awesome. Well, you guys are quiet tonight. I think your New Year's resolution is to talk more at when Trevor runs out of content, 10 minutes before we're done sweating. You know, Sherrard talks a lot more than I do. I think that's it.
No, that's good. That's good. This is great. And you know, we're starting the year with a little bit of a low key, you know, not a lot of content here, just to kind of get the engagement and the everybody's to speak. McGenna, you had your hand up. McGenna, go ahead.
Thank you. Yes, I cannot just, be quiet. My dad was fixing something here, so I'm like, really, I want to speak, and now you're making noise. I can't disappoint everybody here and not say something. I mean, that's like what happened. Check my temperature. Happy New Year, everybody. For the
Happy New
first time to
Happy New Year.
I've been saying Happy New Year. Oh, my hair is funny too today. Interesting. All right, it's a new
Year.
Where do I begin? There's what, 62 of us right now? And speaking about goals, speaking about actions, setting expectations, I mean, they all sound great, but I would like to take us back in 2023 and pretty much share some gratitude for Massive Team for their hard work in building this phenomenal team and educational program that I'm a part of, and super proud to be a part of it, where of course now I qualify as a real estate professional because I believe we invest 1,000 hours a year, not 750. I mean, 750 what? We just like freaking go above and beyond. And it's not like it was a goal for me at the beginning of last year, but given that this journey this past year has been beautiful and full of knowledge, the goal setting for 2024, specifically in the real estate side of the business for me, would not have been possible if it weren't for 2023 and Massive, and specifically the ladies at Massive who do so much for all of us. Shout outs to Maria, to Jasmine, to Candice, and Ellen, welcome, and all the others. And I just wanted to again say thank you. And yes, one of the main goals here is why double our GP deals? Let's 10x them. I mean, I am a 10xer. Let's speak 10x. And it may sound, based on what Sanjay said, it's like a low-key beginning of the year, but I know we are in great hands. I know that we all agree that we don't invest in assets, but we invest in people. And I'm super grateful that we are all together, trusting one another, learning from one another, and call each other strategic partners. And yeah, just wanted to say thank you for a wonderful 2023, and so looking forward to 2024, to growing together, to collaborating together, and to creating more opportunities for many of us. And prior to this call, or while on this call, George Salas, who's here, who's based out of Houston, posted that one of his goals this year is to collaborate with the capital raisers, syndicators, and he's looking for at least 5 of them. And I feel like, George, I actually believe that you may have found all 5 of them within this group. I mean, they are just one phone call away, and it's because these guys that you see over here, they continue to show up even when the market is hot. They continue to show up when the market is cold. And yeah, make it a goal to get to know Massive, whoever you are that hasn't been part of this call prior or still thinking about it. Make it one of your goals, because it is not the hows, it is not the whats, but it's the who's. And you have a lot of powerful who's in this space. And I just wanted to share that with you all. Thank you.
Thanks, McGenna. Rachel, you've got something here. Go ahead.
Yeah, thank you. So my question is, how do you guys keep persevering when things get hard? How are some ways you personally prevent burnout?
Yeah, so for myself personally, I have to reset myself on a regular basis. I'm an emotional kind of guy and I have to do resets. So for example, myself, every year I start off by listening to Audible Grant Cardone's 10X. Then I listen to Be Obsessed or Be Average, and I call that kind of my reset. And there are times, and that's just personal, but it's super hard. You know, and you have to want it more than you don't want it. You kind of have to push yourself through sometimes. And then accountability partner is really good if you can create an accountability partner where you talk with somebody. But you know, that's myself. I don't know if anyone else and you know has any suggestions.
Yeah, I'd love to jump on
Thank
that.
you.
Go ahead,
So
George.
for me, just a 30-second about my background. I'm from Peru, came to the US 23 years ago, and life was hard over there, right? And 6 years ago, before I launched, I started real estate. I was in hospitality, and before I even went into real estate, I lost everything, right? So I've been through hard times, so I know exactly what hard is, and I'm sure some of you are also have been through hard times, right? But my secret sauce has been for 6 years already working on myself every single morning. And that's not going to conferences and attending educational webinar. I'm talking about straight up personal development, self-development, working on self-regulation, right? Working on my high performance habits. Like there's an app that I use, a software called Growth Day, right? This kind of stuff, if I get it in myself and my system every morning, right? Then what happens? Then my day goes better. I spend 30 minutes a day doing some awesome planning so I can have clarity, right? And I spend 30 minutes a day to an hour doing personal development, including listening to Growth Day, right? Darren Hardy, and then doing my journaling. So working on yourself, it has been a great secret for me, and you know, I've been able to do that and just overcome the stress, because life is hard, work is always hard, it's never going to get any better. We have to get better, right? So I thought I'll share that, guys.
That's awesome. Thank you.
Absolutely.
Yeah. And
That-
and what I was going to do one other quick thing here, just because McGann has set it up with how great the She organization is. And I want to show you what limits Trevor will go to be connected into the group. So that's me in a wig to join one of their events.
Which one are you?
This is awesome. This is awesome, Trevor.
Yeah, they had an event in Houston and they always joked if I wore a wig, I could show up. So I went and bought one, and Brenda helped me scare the group. But
This is amazing.
no, well,
Yes. And you know, to Rachel's question, key question, right? Like life is gonna beat you left and right, up and down every day. Stuff is gonna happen, right? How do you stay motivated? And you know, I'd say this. I feel a little blessed and lucky in some ways that I have the bug of doing things. I just go and do things just for the fun of it, right? And you know, and I mentioned that because that's a big deal on getting the motivation, right? Like if your motivation is that money, making that dollar, and you know, in relationships also, I've been through a lot of stuff there. In relationships, if your goal is to meet that one special one, right, and that's your only goal, then yeah, it's life is gonna beat you around. You're not gonna make money, or not gonna make as much money, and that's gonna feel down, and gonna be hard to keep motivated when everything is seemingly stacked against you, right? But, if you're really driving to, like what I was saying, I'm just blessed with, I want to do things and have fun, right? That's the thing. And have that patience, and the things will fall in place, right? As long as you're with the right set of people, keep assessing that and doing that. So just meeting that right person, right? As long as you're having fun, you're going along, eventually you will meet that person, eventually you will get that deal or GP. And I was talking to somebody earlier today. They brought a deal, we submit an LOI, and LOI was happened to be quite a bit below the asking price for the seller. And the person is like, hey, look, I feel a little sad, I feel a little depressed, I did a lot of work on this one LOI, and you're telling me that it's not, it's just drop it. And I said, look here, look at our list. We did almost 500 deal underwriting that we did, because we were having fun doing that underwriting, right? I love learning about those little towns or areas of Dallas and Houston that I don't know anything about. As soon as I get on that map, I'm zooming in and learning, and that learning is the fun for me, because next time when I'm going to Houston or Dallas or Utah for that matter, I'm looking at those areas that I saw on the map and what happened and what I saw and what's special, and I'm linking those, right? Find your thing, the fun thing, right? That's a key. And as long as you're doing that, it helps to keep that beating to eventually, if you, the last man standing or last woman standing wins, right? So you got to keep standing, like the casino example. Don't die, don't run out of money, right? Don't run out of energy. Keep standing, keep having fun with whatever you have. Find your fun. You've decided to do real estate, right? Real estate is so wide, there is so much in it. Everybody can find their fun thing. And I say this, my wife cannot still. I'm trying to get her find some fun things in real estate, but she's a very creative artist type of person, and money and these things just don't excite her at all right? So but over the last 15 years, now that I talked about real estate, she listens and she asks questions. So I'm breaking her down, and she does find her fun in the real estate, right? So real estate has so much. You want to do, you want to do good for the society. Well, guess what? Multifamily, you have a 228 unit apartment complex. That's 228 families that you're impacting in certain way, right? So our deal there, and that's my fun thing. Deal is not doing that well, that great, but every week when I talk with the team, we impacted those 228 family in some positive way. We did something, and guess what? Every Thursday I have my call. I sleep great that night because I get some good news we did at that property. It doesn't have to cost us money. That's my fun thing, other than finding the deals or learning or whatever. So finding that fun thing really helps keep that motivation for whatever it is, even though you're not achieving your goal today or tomorrow, this week or next month. But that fun really keeps you motivated. Number one. And so, finding that fun and thinking the right way and doing that, that's a little bit of a psychological challenge, right? Not everybody can do that. So my second thing to stay motivated, it used to be running. Of course, that hiking that I just did, Kilimanjaro, and the bicycle now. So that physical activity for me, like if I'm not feeling good certain day, I know if I go do bike for an hour, I'm gonna come back and feel different. I know I'm gonna feel better. So get to know yourself. When you are not feeling great or things are not going your way, figure out what is that physical, like an action that you can do. You feel better, and you get your motivation back after those physical action, right? For some people, it's reading that book. you know. For some people, going and screaming, I don't know, I've heard some people have those things. But find your thing, that physical action that gets you motivated, that changes your brain chemistry, the chemical chemistry, to get that motivation back again. And that physical action is in your hand. You don't feel good, but you can get up and
Okay, Sanjay,
yeah.
what is how do you change your physical thing? No. How
I'm sorry, what
do
was that?
you, can you hear me? Can you
Yes.
hear me? Okay.
Yes.
When it comes to the fact that how do you change your mindset? For me, very easy. I don't have physical action. I go and sleep. Good sleep. Beauty sleep is the best for me. So what about you?
Yeah, so sleeping, if sleeping your thing, that's great, and actually that is a good thing. No, for me right now, like last year and this year has been the bicycle. I will go and do the bicycle. I'll go out for I've gone 4 hours on the bicycle until I feel like I need that motivation back. I will keep going and going and going. So is that what you were asking? What is my physical activity for motivation?
Correct. Because you said that physical activity, but I don't go for physical activity. I basically go and sleep, have a good sleep, or I just read a book, motivation book. That's all.
Yeah, and by physical activity, I meant not necessarily exercise, like making the decision to physically move your body to the bed and going to sleep, right, is a physical decision that you can carry and do. Picking up a book and forcing yourself to read that book. So that's what I meant, is a physical action, taking the action for staying motivation is there.